Yeah, remember the name. Jas Takhar, best in the game. Mamba mentality in his own lane. So better pay attention to what he be saying. Get the message, ain't no question. Giving advice for any investment. Welcome to the broadcast, the Jas Takhar podcast.
All right, we're live, sitting here on the couch with Darren and Christina. And I got to emphasize the Christina because I'm really bad at times and I do forget. So, but now that I'm saying it over and over again, I will not forget it. To the viewers and listeners, welcome to the Jas Takhar podcast. If you're watching on YouTube and you have not yet subscribed, what's wrong with you? Subscribe. And the kids say, what is it? Drop the bell, is it, Nikki? What do they say? They hit the bell.
Hit subscribe.
And hit the, well, you obviously know I'm not a kid now, right? I don't know the lingo all the time, but to the right of me, to the left of you, you see two very smiley faces, and that is Darren and Christina from Compound and Control.
Control and Compound.
Control and Compound. I love it. Two C's, Control and Compound. Talk to us about what is Control and Compound.
Yeah, so Control and Compound, we're a firm that specializes in infinite banking we can get into later for business owners and real estate investors. So probably 80-85% of our clients are real estate investors because I found years ago that traditional financial planning doesn't work for real estate investors or business owners. So, lots of problems with traditional financial planning with respect to these guys. So we do something different, and it's just a perfect fit for real estate because we're both real estate investors ourselves.
Yeah, so that's what Darren and I have done a couple of transactions now. We're at 2, I believe. And so I don't have you here on the couch because of that. And so this is by no means, and my viewers and listeners know, I don't do the infomercial testimonial kind of stuff because I'm not sure if that's even valuable to people. The reason you're here is because my podcast is primarily for, let me not even say primarily, let me say 50% for real estate investors, my community of clients that I've been nurturing now for coming up to about 19 years. We're a little over, and Darren's one of them, right? We have known each other for 19 years, but you are what we call an REC insider, and so you're in our community. I think it's up to about 11,642 people. And so 50% of my viewers and listeners are those. And then the other 50 being real estate agents / business owners. Real estate agents are funny because, and mortgage advisors as well, the cousins in our industry, as I like to say, they're funny because they don't really see themselves as entrepreneurs yet and business people. I actually think that hinders them a lot because they don't think about their real estate business as a business, hence why they probably are not comfortable making certain investments not only into the business but into themselves. And the real reason I wanted to have you guys here is because the podcast is not all about real estate. Even though that is what my viewers are about, it's really about creating wealth, getting out of the rat race, because my mother came to Canada in 1973, 1974, and they did do everything that the bank told them to do. So they definitely didn't have anybody telling them to be the bank, right? And because they did, and both of them live, well, kicking, all that, if you ask them till this day, they'll tell you that nobody taught them to buy an income property. Nobody taught them to possibly not pay off your mortgage, right? Maybe just as an option, not to say that everybody should have the stomach for it, and people do have the stomach for it, but they were taught to keep the money in the bank and put their money into RRSPs. And I'm not here to tell people that you shouldn't or you should, but most of my guys and gals know my thoughts on about the RRSP stuff, right? And so I love what you guys are up to and what the value we're going to be able to bring to the viewers and listeners now. And I think, and you'll correct me if I'm wrong, it's the scope of if you're 19 years old, some things that they can do, because I have a funny feeling my 19 to 25-year-old community, 27-ish, buy dumb shit all the time and stuff that are liabilities. And it's really a lot, in my opinion, a mentality thing, a mindset thing, because they're trying to, keep up with the Joneses, or in Brampton, We call it keeping up with the sings. Like it's all about show. And then unfortunately, the people who are maybe, 60, 65, they never were taught that. My parents being 75 and 77, they weren't taught that, but maybe we can actually bring them some value. So where did this all even start for you guys? Like, I know you have an advising background, I believe,
Yeah,
right?
so up till 2008, I was a traditional financial advisor doing RSPs and mutual funds and all that stuff.
At the bank?
Well, no, I had an independent practice, but I
Got
was
it.
working with banks and, traditional financial planning. And really, it was 2008. I was actually salmon fishing in Alaska on a trip of a lifetime. That's the way I sold it to my wife at the time, but I'm going for my 7th trip of a lifetime this year to go back in October. But it was a trip of a lifetime. I had 2 little kids, and I'm up there salmon fishing in Alaska with Buddy. It's going great. And then I remember the day. It was September 29th, 2008.
Okay.
The biggest drop of the stock market in the history up to that point.
For our younger people, what happened at that day?
So on that day, the U.S. Congress didn't approve a $700 billion bailout for the banks or something. So the market collapsed. And there I am fishing going every hour, boring my buddy's truck, driving to the top of the hill, my old BlackBerry, trying to hold it up to get a bar to call to say, holy crap, how much did the market drop in the last hour? And to me, that's when I realized I'm not in control of my money. I was in my 30s, no big deal. But I wasn't in control of my clients' money. So I started studying what rich people do. And I, spent 2 years and over $200,000 investing in myself, travel around North America and learn what wealthy people do. And it all comes down to 3 things. So this is real simple in my view. If you want to be rich, if you want to be wealthy, Tony Robbins says success leaves clues. Just if somebody else says what you want, copy what they're doing. So what I identified is there's really 3 avenues to wealth. And we have all our new wealth coaches, all right, I want you to think of everyone that you know is wealthy, and I promise you they've done one of these 3 things or their parents have. And that number one place to invest your money is you invest in yourself. You're the golden goose. Anything you can do to make yourself better, join a real estate investing group, get a coach, improve a skill. Second thing rich people do is they start businesses. And the third thing, Jas, you'll be happy to know number 3, they invest in real estate. So
even number 2, I'm happy with too. Like I love people starting businesses.
So that's it. So we're like, all right. So if you want to be wealthy, there's what you got to do. You got to invest in yourself. You got to invest in business, and you got to invest in real estate. But really, that's step 2, because step 2 is the investing. Step 1 is where are you saving your money or storing your money before you put it into something like a business in real estate.
Just the people that either yourselves. Or maybe you experienced it yourself. I'm sure that you're watching other people make these mistakes as well. The number 1 thing, let's start there first, which is investing into yourself. Where do you see the holdback, Christina? What is it that just most people don't actually implement that strategy of investing into themselves?
I think it's the time. I know a lot of people, when we sit down with individuals, they've got to schedule in an hour with us to learn the strategy and take the time and sit down with us and do it. A lot of people don't have that hour of time to sit and learn it. So instead what they're going to do is they're going to go to the bank, or they're going to listen to their mom, their dad, their grandparents that said, this is how we've always done it. And instead of taking the time to learn it for themselves, they're going to kind of follow the pack and do what they've always been told to do. And I think that's why why we work with business owners and real estate investors so much is because they take the time. They're listening to these podcasts, right? They're taking these courses. They're showing up at real estate conferences. They're getting together. They're networking. And those like-minded individuals are sharing strategies. But if you don't put the time into yourself to do those extra things, you're not going to learn, right? You're not going to invest in yourself. And I think that's probably the biggest setback for people is, we're all caught up in a rat race, and people aren't taking the time out of their day to, better themselves.
Yeah. So they just rely on someone else, right? Like they rely on what mom and dad and the bank says.
Yep.
But like we get he's 28 now, but he was 24. This 24-year-old kid from Ontario joined a real estate investing group, hired a coach, local coach in Toronto, you'd know the name. And the first year working with his coach, he bought a 14-unit apartment building with none of his own money. Now, that investment in himself is going to be millions of dollars over his lifetime, millions of dollars. And what do most people get hung up on? Oh, did my $5,000 RSP contribution do 4, 6, or 8%? Like, who cares? You're the golden goose. Make yourself better.
Do you find that the coach is maybe the best way to get started? And I'm not asking in a rhetorical way by any means. Or do you find that maybe it could be like a podcast or videos, or like, where is that person to make that investment into themselves? So we kind of figured it out. It is time, and I completely agree with what you're saying, Christina. What I just find odd, because I hear it from the real estate agents more than anything else, because I do have a training company, so I speak to a lot of people. That same person will watch 6 hours of Netflix and binge watch that shit. You know what I mean? And then boom, the next day they start complaining, and they actually even completely forgot that they had a conversation with somebody about possibly investing into themselves, right? So if you're watching or listening right now, the best thing to do is invest in your fucking self at the start, because that is like, I love the whole golden goose, right? Like, it's so true. So let me go back though. So we know that they should invest in themselves. How could they? Is it coach? What else are some stuff as well? Because we know that they can pay for a coach and finding a coach. I've spoken about that a lot, but what are some other ways that they can make some investments into themselves?
Yeah, a lot of it's free, right? I mean, like, there's amazing content on YouTube, right? If you're not ready to buy a coach, well, maybe you're not ready for that, or hire a coach, you're not ready for that step. But instead of 6 hours of Netflix, you watch 6 hours on some construction topic. Guess what? You're going to know more than 90% of the people, literally after a week of studying it, than 90% of the people out there. And study a bunch of things and find what you like and invest in that, right? So maybe it's business, maybe you want a side hustle, maybe you want to go back, and maybe you're a traditional guy and you want a T4 job the rest of your life, but you just want, instead of making $100,000, you go back and get another certificate course, public speaking, whatever it is, to bring that up to 150 or 200. That's going to mean millions of dollars over your career. So anything you're slightly interested in, spend some time, like, just follow your passion crap. It's like, find something you're good at and you'll become passionate about it. And you become good at it when you spend the time, effort, and energy to invest in you learning it.
I'm such a big believer of that as well, Darren, because when you're good at something, you're generally, if you look at somebody, talking about success leaves clues as well, when you see people that are actually really good at something, it's because they enjoy it. And they enjoy it because they're good at it. Exactly. Right? It's finding that mix. And the way to do that, in my opinion, and I'm completely wanting to hear your guys' thoughts on this as well, if you differ or something to add, is you gotta try stuff. I always use the analogy of she's 15 now, she just turned 15, my 15-year-old niece, and we'll say like, hey, hon, like, try some oysters. I don't like oysters. I'm like, when the heck did you ever eat oysters? She's like, I've never tried it. How are you gonna know if you like it or not, right? It's, if you're trying to find your passion, just like, try a bunch of shit. It's the only way that you're going to come to realize if you're actually good at it, and or if you have some type of passion for it. Like, have you guys seen anything different from that, or thoughts on that?
Absolutely. I think that there's so many people that are afraid of failure these days. They don't want to take the risk, so they don't want to fail. And failing is the next step in succeeding. Like, as many times as I've failed, I've done better and got better, right? And that's what I think, there's a mind block in people's heads that they don't want to fail, so they don't take that step to do it. But that's absolutely how you're going to figure out and find your passion, is by taking the leap and taking that risk.
It's right here, Christina. One second here. Talif, boys. I can't see it.
Right there.
Talif.
Take a leap of faith.
Yeah. I love it. I love it.
This is our success table that the team put together, but it's right there for us. Because the cool thing with failure, in my opinion, is that the next time you try something, you're not starting at the starting line again. You're starting where you ended up at that failure. So you have a new starting point. And I can tell you, I've actually probably failed more than I've succeeded. If I look at it, like, I have so many micro failures in a day, right? Like, it just happens, but it's those successes, the 4 or 5 big successes that I've had that have changed the course of my life, right? But I had to go through the 452 failures that nobody essentially really sees much on social media. But when you actually peel back the curtains, you'll notice that there's been a lot of failures. Yeah. I'm sure you've gone through it with investing, man.
Yeah, I love that. Oh, must be nice, successful business, real estate investor like you. Yeah. They weren't there when you failed 4,500 times. Like, say, it's okay, keep going. It was like, yeah, they were like, friends, relatives, like, you're going to do what? Like, real estate? No, that's, you're going to start a business? Ooh, it's not very safe. Like, take risks. And especially when you're young, who cares if you fail? It's just fail, and then you'll find success. You'll learn something from every failure.
Like my boys here, Nikki and yes, Nikki, you're still 30, right? You didn't turn 31 yet. 20 to 30. And I hope that they hear this type of message. Like, from 20 to 30, you got so much time afterwards. Like, I get you all got 80 years to go and all that. Like, that's pretty easy, and I think they understand that. But it's the fact that you can fail so much. You can take so many more risks, even at almost 41. I know I look 22. Thank you. But even myself, I can take some risks, but my father can't at 77. He can't take a massive jump because he needs some of that nest egg that he's kind of saved up, right? So how did the whole Be the Bank thing start? Like, where did that come from? Because I love it. I love the branding of it. It obviously gets people's attention. And then I want to dive into, like, let's give our guys and gals, like, give them some strategies on how to actually be the bank, like, and what you mean by all that.
Yeah, so when you look at what a bank does, right? So, you walk in the bank and give $100. They don't go over to the corner of the vault and put your $100 in a nice little pile and say, Jazz's pile, and they leave it there until you're ready for it.
I actually thought they did that when I was a kid. When I was a kid, I thought that's what when I know where you're going to go with this and I want you to be the person, but I was like, that's what, my money's there. It's my money. That money is mine. Continue.
Yeah. So they take your $100 and they're going to give you $1 in interest, 1%. And then they're going to go to Christina or anyone and say, all right, credit card at 22 or mortgage at 6 or second mortgage at 12, line of credit, car loan at 10, just say 10. All right. So the bank gives you 1% and charges Christina 10%. How much did they make? We can do math, right? Yeah. 10% minus 1%, 9%.
Yep.
No. Let's do the math. If they pay you 1% interest on 100, what do you make? $1. Mm-hmm. Now, you're a business guy. If you buy something for $1, the use of the money, and then you loan it to Christina for $10, you bought something for $1, you sold it for $10, that's a 900% return. It gets better, though. Then they go, oh, we're going to loan it to Christina and Jazz and Simeon and Darren, and they loan it to 7, 8, 9 people, and it's like, oh, they multiply money. So that's how, what we specialize in is this specially designed cash value life insurance that is a savings vehicle. Instead of storing your money in cash, you save it in cash value life insurance. You're going to compound 4 or 5%. But now, anytime you're ready to do a deal, you're compounding that tax-free for the rest of your life. You're going to have a tax-free income. You're going to have a death benefit. You're going to have creditor protection, all this great stuff. But when you're ready to go invest in yourself, a business or real estate, you can call up the insurance company and they're contractually obligated to loan you 90% of your money, no questions asked. So pre-construction condo I bought from a 41-year-old, I think he was 37 at the time, fella from Brampton. So year one, when I bought my credit in my condo in Port Credit, it was $38,000 down payment. Mm-hmm. I didn't use my money. I called the insurance company up and I said, hey, can I have $38,000? And they asked me two things. They said, do you want a check or do you want to deposit it in your bank account? They didn't ask me what it was for, when I was paying it back, if I was paying it back, terms, anything. They just loaned me the money. Now, my money stayed in the policy, continued to compound. I multiplied money. And I multiplied money. I'm also providing a death benefit on my properties in case something happens to me. So I took that multiplied money and I just paid some interest on it. The next year I borrowed again on another $38,000, and I just paid interest. So over about a 6-year period, I used 6 years, 4 years to get it built and 2 years for someone to do the property management for me. So 6 years I've got no heavy lifting to do. That's going to cost me about $15,000 because that interest is tax deductible.
Right.
Well, the condo's up $250,000. I refinance it, pay back the loan. I'm still saving for retirement tax-free. That was an and asset. I'm doing my cash value and I'm doing that. And the fourplex I bought last year, borrowed it. The cool part about borrowing, now I get a little cocky when I go to the bank. I get this private banker. He's always got the fancy suit on. Good fellow, but I go in, I buy this fourplex in Cornwall. So it wasn't, I joke, people go, 375, you bought a fourplex for 375 in Ontario? I go, put in perspective, I paid 55 grand for a parking spot in Port Credit. So, it's location.
A little different location, yeah.
But I go in and so I go to I borrow 80 grand from my cash value life insurance. Doesn't affect my cash value. I go into the bank and I go, listen, I need a mortgage for 300 grand. And he's like, well, where'd the mortgage come, or where'd the down payment come from? And I'm like, borrowed against my cash value there. What do you think of that? And he's like, it's fine, Darren. You do it all the time. I don't know why you're going to be an idiot about it, but I'm just looking for a fight with the bank, right? So they don't consider it a loan for borrowing capacity. So that's huge for our real estate investors because they always need to store cash somewhere.
Yep.
And, you're doing a flip, you're doing a BRRRR, whatever. Money on your terms, pay it back when you want, how you want, and if you want. That unstructured loan is just incredible in real estate.
And what type of interest do you pay? Like, is it what prime is, prime plus something on that?
The rates are what, 7 to 9% now, depending upon the company.
6.5 to 9.
Yeah. 6.5 to 9.
And so I want to take a step back because I actually followed everything you said except right like at the start, and I know my viewers and listeners are kind of like that as well. The cash value insurance policy.
Yep.
That's I'm using the right word. How does one set that up? Like, is it a specific policy with a specific insurance company? Like, walk us through that a little bit. Take me to the basics of that.
Yeah, so there's 10,000 insurance products out there in Canada.
Okay.
There's 4 we can use.
Okay.
So one from each of the four companies we use. And these products are not like your traditional life insurance. Traditional life insurance, you're buying death benefit, right?
Yeah.
Here we're saying we love the tax advantages of life insurance because the tax code says life insurance cash value grows tax-free, your loans are tax-free, and your death benefit's tax-free. So we love the tax-free nature of it, but we don't want this big old death benefit. So we're able to structure the contract so we have a minimum or smallest legally allowed death benefit to maximize the cash value. So it's the cash that we're interested in because the cash, we can borrow 90%, no questions asked. It's guaranteed to go up. Never had a bad year in 150 years. Never missed a dividend. And it just continually boring and effective. But it's not your investment. That's where you're saving it before you deploy it into a business and real estate. But that ability to get unstructured loans whenever you want, you're in the middle of a BRRRR or a flip or something, and all of a sudden you need another 30, 40 grand. That money's tough to get.
Yeah.
Not when you have your own bank.
Hence, how you can be your own bank, essentially. What is it that you guys notice why most people don't do that, though? Is it just getting the word out more, or?
Yeah, well, there's billions of dollars going into this stuff every year. So there are a lot of there's a lot of people, a lot of wealthy individuals that are doing it, real estate investors and whatnot now. I think it is that the old ways of the banks can't sell it. So you have to go through one of these companies and get the specific product. So you're never going to hear about the bank. Like, they're not going to talk about it. And there's only a handful of individuals that specialize in it in Canada. So like we're one of a few that are, actually know how to do it properly. Because the thing is, you can buy these products, but if they're not structured and if you don't take the time to actually learn to utilize the it's just a product. If you don't learn the strategy, then you can't actually use it. So people have to take the time to learn it. So there's a first block that you might see people not do it. And then you have to make sure that you're working with the same, the right individual to do it. A lot of people also get caught up thinking that it's only in the US because there's a lot more out there on it in the US, but we can actually do it in Canada. It's just as good, and we can even say in some cases it's better.
And can you use, and why do you say it might be in some cases it might even be better than what's in the US?
One of the big things is you save tax.
Got it.
Our taxes are bigger than the states, so we're saving more.
Yep.
Got it.
Yep.
And in terms of that unstructured, like the loan, can I use that for anything, or is it just real estate
Possibilities are infinite.
Yeah,
Okay.
infinite.
Got it.
There's no questions asked when you take that loan, right? It's literally, it's a collateral loan against your policies. You're not touching your money, your savings. You're asking for this loan. They're depositing in your bank, and you're doing it, your account, you're doing exactly what you want to do with it. No questions.
Okay, so now.
So I was going to say, so let's say you did 10 or 15 deals through your lifetime.
Yep.
That you wouldn't have been able to do real estate deals or business deals,
Yep.
investments in yourselves. So you're going to have way more money, and then you're going to reach retirement. And because you never stopped the compounding, you're on that sexy part of the compound interest curve. So you hit retirement, and all of a sudden you go, wow, I got this boatload of cash value. I don't want to do any more real estate deals, Darren. What do I do with this now? Well, now we can take those loans, don't affect our government benefits, don't affect our income tax, don't show up on a tax return, tax-free loans, and those we can just top up our lifestyle, and we never pay them back until we die. But now you get this massive cash value, and that death benefit we didn't care about, well, guess what? It's going to be bigger than the cash value. So now we got millions of dollars or a lot of money come in at death, pay off the loan, still leave your family a bunch of tax-free money, take care of those properties, expenses, final expenses, etc.
When someone gets started with you guys, what is the process? So, like, kind of walk me through that. Someone's going to go to your website, and we're going to have all the information there, and then what happens? How do you guys walk people through? Who do they speak to? Walk us through all that.
Yeah, so you're going to, we'll actually have a link for your listeners to come and sign up. They'll
Awesome.
get put through to the front of the line to meet with one of our wealth coaches.
Appreciate that.
And really, it's just an education session. So the whole thing is learning about it. So the first thing we're going to set up is an education session to kind of go through this top to bottom, exactly how the strategy works, the product, examples of numbers, things like that we can show you. So you can decide if it makes sense to add to your plan, right? Learn all about it. If it makes sense to you, if it sounds good, then we're going to kind of move forward in developing a plan specifically for you. So the very first session is really, I've taken the step to learn more, and we're going to send you some resources and stuff beforehand, because I do think that's the better place to start is read. We've got Darren's books, we've got our podcast that we have, our social media, where you take the time to learn about it, then you meet with our wealth coaches. They're going to teach you more about it, like you're going to learn the fundamentals, and then if it makes sense at that point, then you're going to move forward. We're going to develop a plan that's more specific to you and your specific planning.
So far, in terms of like right up to this consultation, which seems like very no risk kind of to me. Any costs involved that anybody? No. So this is like, because from an REC Canada perspective, our like my real estate company, we've always led with education, and we've always made it free. So it's kind of cool to kind of hear someone else speak about their business from that perspective. It's all about leading with education, and then at some point you guys can walk them through, like right from start to finish. It seems like it's a fully turnkey
100%.
system. Am I missing anything?
No, that's what we specialize in, right?
Okay.
We only do this, and we only do it for business owners and real estate investors. And for the most part, 95% would be business owners and real estate investors, because we are real estate investors and business owners, so we know what they're thinking. Like, to say to a real estate investor that's 25, 30 years old, what I think you should do is take your money, put it in a nice balanced mutual fund with the bank, wait 45 years till you're 71, and then drip it back to you every month for the next 20 years. Like, I think that's crazy if you're talking to a wannabe or an existing real estate investor or business owner. Mm-hmm. If you're going to be a government employee, you want to top up your RSPs an extra $100 a month, have at her. But if you want to take advantage of opportunities in your business and real estate, you've got to be in control of your money to take advantage of those opportunities. Because, Christina, when's a deal of a lifetime happen?
When somebody needs money and somebody else has it. So you have to set yourself up so you're the one with the money.
And you're in the middle
in
of
your own bank,
Yes.
to be able to go take advantage of that opportunity.
I love that.
Yeah.
Now, in terms of your guys' like actual your specific investment stuff, I want to talk about what your thoughts are about what's happening in the market now, because you guys are investors as well. Like, what are some strategies that you might consider looking at? What are you guys thinking about when it comes to like investing into real estate? So kind of away from what we do at the company, and just as investors, what's your thoughts?
Yeah, so I've done a bunch of stuff in real estate. So I did some private lending. That was fun. Again, I just called up the insurance company, borrowed $100,000, loaned it to a developer at 15 points. He gave me a check for 115. I gave the insurance company a check for 100 and $5,000 of interest. Pocketed the 10 grand. I've got a couple LPGPs. I'm a passive investor, so I don't like tenants, termites, or toilets. So I did that again. Policy loans. Did some land development. And
No, but now, like, your thoughts. So I actually kind of know your portfolio in that sense, Darren. But what's your thoughts on like the current market, right? Like in terms of your outlook as well, your forecast, but starting with just your overall thoughts on like what you're seeing in the market at Canadian whole.
Yeah, I think people are scared to buy right now. People are petrified to buy. And one of two things are going to happen. We're going to have a massive market correction, and they're going to be right to hold off. I think that's less likely. Or we're going to see a slight correction, interest rates drop, and the demand for houses explode as those mortgage rate comes down, and you're going to be kicking yourself for saying, why didn't I buy when interest rates were 7% mortgages for a year or two and refinance after a couple years and save 25% on the purchase price? I'm not promising either one of those scenarios, but that's what we're hearing. So we get a lot of people piling up money.
Yep.
And which, is good for us in a sense that you need to save your money somewhere, and we think the perfect place to save it is in that infinite banking cash value life insurance policy. But yeah, it's just people are scared. People are just scared. But we're starting to see the prices. I know on the East Coast, the prices now are starting to level out, and people are getting nervous. There's deals to be had versus there weren't deals to be had for the last 2 years.
Yeah, I think, for us at the time of this recording, we're September 2023, to see, it's going to be interesting to see the numbers for the rest of this month. So, come first week of October, because that's going to really tell us the story, because the Bank of Canada just obviously made the announcement that they're not going to touch the rates for the last announcement. We'll see what they do in October. But now, what happened with consumer confidence? We just don't have enough data in the last week yet. But that, I think, is going to tell us which ways. Are we going to see the crash? Or is it going to be like a soft landing and then right back up again in terms of the values? And because I like the strategy that you spoke about, Darren, which is even if you did purchase at what we're seeing now, about 6.5%, I think, maybe a little bit higher than that, but right around there. And then, but held off for, you get a mortgage at 6.5%, and then in 2 years you refinance it when the rates are going to come down. They're not going back down to the nonsense that we saw at 1%. That ship has sailed unless there's some type of new lockdown that's coming. I mean, I don't see 1 to 2% interest rates, and all the major economists are saying the same thing. We all got to get prepared for that 4.5% interest rate for the next maybe decade or so. That's going to be, but if you can refinance at that, now you're making that extra money because you're buying at a purchase price that's maybe about, here in Toronto, in some areas, 20% less than what the peak was. You're probably closer to maybe now 15, because as values start to creep up again. So I really like that strategy.
And rents aren't dropping.
That's the one thing that hasn't yet. The only time in the 19 years that I've seen him drop is right at May 2020, so a month after lockdown. And they dropped, stayed steady right through to 2021, but January, February of 2021, you start to see them increase. I always use a one-bedroom condo in downtown Toronto as the example. And so pre-COVID, February 2020, it peaked at about $2,500 a month, a one-bedroom. September, October 2020, it went down to about $1,900. As of right now, September 2023, a one-bedroom's just topping $2,600.
Wow.
In downtown Toronto. Proper downtown Toronto, center ice is kind of the numbers that I like to use, and we don't see an end to that. That's going to get to 27, 28. Your two bedrooms are north of $3,300, $3,400 in downtown Toronto right now.
Wow.
Right?
Yeah.
So when you get that triple benefit from real estate, of values going up, the mortgage going down, for me, values going up is really the icing on the cake. Obviously, there's greatness to the passive appreciation. However, I don't even care if they don't go up 10, 15%, that nonsense that we were seeing at 22% increase. That stuff doesn't last too long when it goes up that fast. But if values go up 2, 3% every year and they compound, I'm okay with that. I care about the other two stuff. Just let rents keep going up and let my mortgage come down. That's what I care about, right? And so for anybody who's thinking about possibly, is real estate a good move or not, I'm not here to tell you if it is or if it's not, but that is the benefits of real estate. Now, you got to determine yourself if that's what you want in your portfolio. I want to shift this conversation a little bit. I'm seeing you guys do a lot more content. Videos, podcast, your own podcast. What's the name of the podcast?
Control and Compound.
Very easy. Found on
All of them.
all of them. Love it. Okay, so wherever
YouTube,
wherever-
Apple, Spotify.
YouTube's
all
huge
that
for us
jazz,
now, too.
yeah.
Got it. Wherever you listen to podcasts, find it, Control and Compound. Easy. Why the content stuff now? What started it?
it's I look back and I just wish we had started it earlier. It is just such a treat when you have this content that you can share with people. Someone will call up and say, "Can I put one of these on policy on my kid where I pay it?" And we're like, "Oh, let me send you a podcast we did on that."
Yeah.
Or, "Can I use corporate dollars?" "Yeah, let me send you a pod." So now, by the time you meet with that person, they're educated on the topic so they can ask better questions. So the meetings we have now are a lot more valuable because it's not, someone showing up going, what is this thing you do? And you spend, 2 hours explaining what you do. Now when people come to us, they've read a book, they've listened to some podcasts, they've done some homework. So when they come to us and go, "Okay, I kind of understand it, but can you explain this, and that to me?" They have good questions. So it's been game changer for us.
Yeah, Darren was a bit against it at the beginning. It wasn't
Oh,
as
here
we were
we
talking
go.
about it today, actually, because
easy on the eyes as you are.
I remember it a little
really
different.
do like Darren. I like Darren from the day I met him on the. Let me rephrase. I didn't meet him in person, on the phone. And just so everybody knows, Darren and I did all his transactions that he did with our REC Canada all on the phone. Like, we didn't even see each other face to face on a Zoom back then, buddy. So I appreciate the loyalty and the support and the trust. But continue, Christina. He just wasn't into it at the start, you're saying?
Well, I was like that, and what's this TikTok that you're speaking of?
I don't want to shake my booty on TikTok.
I'm going to be a dancing insurance man, I think is what he said.
My kids were like, "You're going to be the dancing insurance guy. This is going to be so embarrassing."
No, but I said that's where the future's going, and that's where people are, and that's how we can make connections. And that's where we can build trust with individuals because they can see us and they can know our thoughts. Just listening to our thoughts on what we're thinking about different things out there. That's important, and also it's a way for us to connect with our clients regularly as well. So we talk about education a lot and it being key, and if they're consistently listening to the podcast and they're learning new strategies from the podcast, and they're going to be a lot more likely to utilize, and then it's going to be better for them, right? So if you're not top of mind, then they're not going to think about it, and they're not going to act on it. If they're hearing from us once a week saying, "Invest in you, now's the time to do this, now's the time to do that," they're going to take action. And I am in this to help people, and if this is a way we can help them on a regular basis, I think that's what's important, right?
Yeah, and for the business owners and the salespeople and the entrepreneurs that are watching and listening, I think that's very important what you mentioned, because it's a lot easier to have a conversation about your own product or service when you're speaking to the person and they're a little bit more educated.
Yep.
Yeah.
Right? It's just, and they're a little bit more informed. And I don't mean education from a formal perspective, but they're just informed through a podcast. It just makes the process easier. And so I always, on a podcast, when I know people are doing content, I always like to get their take on how they got started and the whole journey like we just did, because there's thousands of people who are just not taking the jump, that are listening right now and they're not taking the jump. And I think it's almost now become my duty, and I appreciate you guys putting out your journey out there as well, to say the pie's big enough. You guys got to jump on this. You got to get onto this content as an owner, a business owner, an entrepreneur, because before you can help somebody with your product or service, you need their awareness. They need to know about you. And if they don't know about you, you really don't got a shot at selling them anything, right? And it's those 7 to 8 platforms that you guys mentioned, and all the TikToks and the Facebooks and the LinkedIns of the world, that you really need to get out there and do with your own style, right? I actually think it would be cool if Darren did the dancing insurance guy. That would be cool. But if you'd be like, "That's weird, I don't want to do it," then it makes no sense, because you're not going to have any longevity in it, because you're only doing it for the kids and you're not going to really like it, right? It goes back to, kind of full circle. When you want to try to find something that you're passionate about or you like, you got to try it. So try the videos. And some people shouldn't be doing videos, in all honesty. It's just odd.
Do reaction videos if you can't do a video.
Sure,
do something
there
else.
you go. You know what I'm saying?
But Jas, you talked at the beginning about real estate agents not sort of buying into the fact that they're business owners, because real estate agents are business owners.
No, they don't see themselves as
But once you determine you're a business owner and you want to scale, Well, then you get into stuff like, well, I'm not going to be able to scale. I'm part of the strategic coach program. So I'm a part of the 10X program, how to 10X your business.
Okay.
And we did this exercise where it's like, okay, go back in time and look at your business when you were 1/10 the size. And it was like, what do you mean? And then all of a sudden we started doing the math and it was like, oh, well, yeah, like everyone in the room, we had all 10X'd our business. And then he's like, okay, well, 10X it now. And it's like, well, that's crazy from this point. And he goes, do you know more now than you did back then? You do. But once you start, if you want to double your business, you got to work your ass off. If you want to 10X your business, then you get into, who, not how. I need a who. I need someone that can help me 10X the business. I need multiple people who can help me 10. And now you're thinking like a business owner, not like an entrepreneur going, well, 80 hours a week, I made 100 grand. If I work 160 hours a week, maybe I can make two. No, that's not going to work. If you want to scale, you got to think of yourself like a business and say, who can I put in place like your team here to scale your business?
Don't give them a bigger head already than they already have.
Because they pretty much run the show here.
Between these two.
You can't even get your mic to stand up.
Yeah, I know. That's why I'm just leaning on it. I want you guys to, what is the easiest way to find you? And what is the website, obviously, but then what is the one social media platform that you're like, oh no, that's like our thing. Like I always talk about, like my podcast is my thing more than Instagram, more than TikTok and all that. What's that for you? And then also drop the website.
Which one do you think it is?
I think
I like them all.
YouTube's really taken off, so we're excited about that. But the podcast, we started it. We've got 80 some episodes in now, coming up to 2 years, and that first couple podcasts when you're getting like 25, 50 views, and it's like, coach says stick with it, and now we're getting thousands of views, and it's awesome. But really, the podcast, YouTube, and Instagram would be the big three.
Yeah.
Okay, awesome.
I like Instagram to start at Control and Compound because it gives you those little tidbits. So I like having, it's easy to digest. So if you're not ready to take on a full podcast, if you go follow there, you can get little pieces that will kind of get you to the point where you might want to hit up a podcast later.
A podcast or a YouTube, and then we have webinars too, and we have webinars just for real.
Webinars?
It's a recorded webinar. You can download free on our website.
Yeah. Okay, and the
It's
website?
all on there.
controlandcompound.com.
Yeah. And we're actually going to give you a link specifically for your listeners where they can click and come directly and get ahead of the line to speak to a wealth coach if they want to.
Awesome. Yeah. Do you want to drop that now, or do you want to just give that to us and then my guys can put it in the description?
Yeah,
and
I'm
stuff?
going to get that.
That's easy.
Yeah.
That's easy. I want to thank you guys for bringing a lot of value. I know we're going to do so much more together. I mean, I just got to meet you, Christina, but I actually like Control and Compound even more now than I originally did because it's always been him. But Darren's been awesome. I know if one of my people call you guys, it might not work out for whatever reason, but I know you guys will take care of them with white gloves on. So I am actually like putting myself out there and saying that if you do give these guys a call, mention my name, mention REC Canada, whatever. I know you're going to be very, very taken care of very well. Other than that, I want to again say that I'm very much looking forward to the growth of all your content as well as the company as a whole. Thank you for joining me today.
Thanks, Jas.
for having us.
Awesome, guys. We'll go do one of those. Awesome.